Hello, traders. It is 8:04 a.m. Chicago time on Thursday, the 12th of December, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1657. Thanks for joining me today. I'm going to start off real quick so that we can avoid confusion. Today is rollover day. It's Thursday before expiration or quad witching Friday next week. And therefore, I'm rolling with the exchange. My data rolls, everything rolls to the next contract. The next contract in U.S. indices is March 2020, symbol H0 or H20. So the prices you will see will reflect this, and are likely not to match your prices on your platform if you're still remaining on the December 2019 contract. Also, in the review segment, the chart will show, just for today, it will show March or December 2019 prices, and we'll be reviewing them against what actually happened, which would reflect March 2020 prices. The premium for the ES and others has been posted on Twitter. You can find that at twitter.com/futurestrader71. There's a table there. It shows the ES premium between the two contracts is plus 2.75. So we have to adjust either the current contracts down 2.75 or the December contract up 2.75 points for this thing to make sense. It only happens today. The other thing is, as is always the case with rollover into expiration, somebody somewhere is going to write to me and say, why are you rolling? The volume's in December. Why go to March? This happens every rollover. Here's the thing. Unless you're swinging 400 lots, which I doubt you'll be listening to me if you are, maybe you are, it really doesn't matter where the volume is. And some people argue, well, you're switching, but really, again, the more active contract is December 2019. So why are you switching early? Shouldn't you wait till the end of Friday or maybe even Monday morning? The exchange rolls this morning. My data rolls this morning. Why would I complicate things by manually forcing my software to maintain December? And by sometime late morning tomorrow, the volume is going to switch. In either case, starting today, there is a roll. Some have even started before that. And so a lot of the volume is going to be calendar spread volume anyway. So in any case, the delta is going to be off. Volume at price is going to be off. The volume profiles are going to be off. All these things are going to be off. And that's just a natural part of trading futures. It just is what it is. And so from now until the pace of the roll shows that we are approximately 90% or better or so rolled, which happens around Wednesday of next week. We have to be careful using volume because some of the volume is split between the two contracts, and also a lot of the volume in the delta, which is aggressor volume, reflects those calendar spreads or manual spreads, lifting the offer in one, hitting the bid in the other. The intent here is to roll a contract rather than to be selling or aggressively selling current prices in the current context. Something to be aware of, very unique to futures. The theme today and what's important today, there's quite a bit on the calendar, something to be aware of. Trump is meeting with his trade advisors today to decide on the December 15th tariff decision. Remember, there's a deadline here, which is this Sunday, that there would be an increase in tariffs by the Trump administration. And that's, we've had news back and forth that, they're likely not to take place. They're likely still on. Phase one will be approved before then. Clearly, there's no progress. So they're expected to meet, and those tariffs have a value of about 160 billion. Will be affecting some 160 billion of Chinese goods. So it's quite impactful. What does that mean for us traders? It means that today we are very, very likely to get disruptive releases. We need to keep an eye out for tweets or press releases from Trade Representative Lighthizer, Treasury Secretary Mnuchin, and the White House advisors Larry Kudlow and Peter Navarro. So that's something to pay attention to. In addition to that, we did have the ECB release its disposition today, its decision on stimulus, and Lagarde is still speaking. I believe her conference continues. It started about 40 minutes ago. The ECB kept its deposit rate at a record low, minus 0.5%. You get to pay the bank for them holding your money. It's awesome. And bond purchases of 20 billion euros, $22 billion a month. In addition to that, the UK is running its election. The Tories are expected to win. This is being described as probably the most important national election in decades. Millions of Britons are expected to cast their ballots Thursday in the first December vote in nearly a century, and markets are currently reflecting an increased likelihood of a Conservative Party win. So look out for an upset there. Not likely, but it could happen. But since the UK uses a first-past-the-post model, Prime Minister Boris Johnson and his Tories still have to face the electorate. So those are the themes for today in terms of what's on the calendar, what's scheduled. The only thing remaining of significance today is the Japan Tenkan Large Manufacturers Index, which comes out at 6:30 Eastern. I know that's a lot of information I'm throwing at you here, but you got to be aware of what's around you and what the environment is likely to be pushed around with. Here's yesterday's action. Remember, this is showing December prices, okay? The main expectation from yesterday is we would open in an open auction, dip down into 31, 34, 50 or so, the overnight point of control. And I was looking for the market to rotate back up into 31.43 and to push into 31.47.50 in December prices. I'm going to show you what actually happened, but because it's adjusted for March, we'll need to speak a different language here. The expectation in March terms is that we would turn down to 31.37 and a quarter, 31.37 and a quarter, and then we would rotate up, get tangled at 31.46 and a quarter, and then push into 31.51 or so. This is what was expected yesterday. Here's what actually happened. We pushed down into 36 as expected. We got the 36 and a quarter on the nose right here. And then we rotated back up, and we could not get out, could not manage to get out above this 31.46 and a half area, which is last week's close, and ended up having a neutral day up. We finished just above the IB high. Technically, this would be considered, if I was an algorithm, this would be considered a neutral extreme up day, which is likely to drive prices higher the next day. And the target here would be in the March contract, 31.50 and a quarter above. So overall, the market ended up doing what was expected. A little tricky here. The impulse up 6.75 points into that 31.45.75, which again 31.46 and a half is last week's close. This pullback was a standard trade for me, and it ended up failing through and pushing to the other side. The IB was already in. It looked to me like there was a bit of confluence here, mid VWAP, OS high, and an important area from the prior day closed there. It tried to hold. It gave a 2.5-point rotation, and it ended up failing. Not what we want to see, but that's the cost of taking a chance in trading. And it ended up rotating back up and pushing towards the high anyway. Notice the delta yesterday, just, even though the prices from the open where the delta zero pushed quite a bit to that 45.75 in the March contract, you notice that the delta just wasn't there. This was pre-rollover, and the market just did not have, the buyers did not have that aggression, and price and volume didn't really follow each other. But I got to look at and take the setups that are in front of me. There's always some reason why a setup might not work. It's totally irrelevant information. You take the trade that's in front of you and you manage it, and that's all you can do. Again, I'm in the March contract, so on rollover day, so the volume here is non-representative. Is not representative. It only shows 51,600 contracts traded in the overnight session, which is significantly lower than the 150,000 or so that's common recently. But the overall price action is about the same. We have a fairly well distributed profile. The market's quite balanced and is exploring from both sides. We are beneath yesterday's close right now and are pushed up against it. We're beneath the mid VWAP and the point of control for the overnight session. So it looks weakish, but we did get the extension from the neutral extreme up of yesterday. We did get the extension up into 31.5350. If you notice, there's a stock zone there at 31.54-ish, which held overnight. But that's the overnight session. Again, the volume non-representative for the next few days. We just have to live with these facts. Here's the composite for those of you who need to check your highs and lows, good points of reference. The low that we put in on RTH on June 3rd, the low of this last big swing, that low is 27.37 and a quarter, 27.37 and a quarter in the March contract. The high, the all-time high, which was put in on the 27th of November, is at 31.5775, 31.5775. So if you want to check if your data is correct, post-adjustment, if your data feed is correct, those are the key reference points right there. Let's switch gears here and look at the order flow. Again, we're looking at the order flow on rollover. It really doesn't have that much of a meaning. I still have the December contract here, and even that doesn't have much in it in last night's session. I mean, you look at the order flow and the movement last night. We have one collision at 31.50. We know 31.50 has had liquidity that we've been monitoring over the last few days. The liquidity is constantly there at the mid-century strike. Liquidity above there is at 53 and 54. But other than that, we really can't glean too much from the overall heat map. The market is, took a big dip with the European Open. It took a big dip down and had some flutters on the ECB announcement, and we are consolidating. We've been consolidating for a bit of time recently. Here's the same picture using the March 2020 contract. It's a lot murkier, and you see these red dots, and you can see the liquidity. It looks much more like the NASDAQ than it does the ES. This will change. This will change as the market opens, and it'll change through the next couple of days as well. Again, let's flip back to What's expected for today? Today, again, a couple of key things. Mind the news, very, very important. We're opening right on top of yesterday's point of control. I'm expecting an open auction that is likely to dip lower and push into 31.41 or so. Potentially take out the overnight low. I'm looking for it to bounce back up, test the upper end of the range, and likely squeeze to 31.49 and a quarter and hold steady up there for the session as we go into Friday and the weekend involving this trade talk. All of that gets blown out of the water with one tweet, but we go with what the auction is likely to do. Here's why I'm looking for that higher low, higher high. The higher low, higher high is the result of the peak, beginning of one-time framing down. So we have a lower high. Remember, I don't care about the lower low. I only care about the lower high for one-time framing down or a trend down. We have a lower high, so we are firmly in day time frame, one-time framing down. So the day trend is lower. And then yesterday we ended up poking that high, ending that with a higher low, higher high. So today I'm monitoring for a higher low and a higher high again, just to look at the big picture. Here's what it looks like on the market profile. We've shifted down. Let me actually change this. We've put in a peak, lower high, higher low, and then we've got this excess down here. We still have a gap that we need to fill. This big gap still not filled. It's about 2/3 of the way filled, and then the market is turning up. Notice that the point of control shifted down in the market profile. Point of control shifted up in volume profile. I'm going with volume profile. I'm going with where the volume goes. And so to me, this looks like yesterday, not only did the high get taken out from the prior session, but the point of control has shifted up. And to me, it looks like it is set up for a rotation higher. There's the point of control shifting down and then shifting up, and I'm expecting it to either stay in place, very likely to stay in place, with a price action pushing higher. Again, I'll draw the primary scenario, open auction. The way we're positioned today, we're below the overnight point of control, mid VWAP for the session on a balanced profile. Looking for it to test to the other side, squeeze across, consolidate, get into this 31.49 and a quarter. At some point, consolidate, and then sit sideways. I expect the overnight low to be vulnerable on the way down. Secondary scenario, I'm going way over my time here. Secondary scenario, open, squeeze, push right into the overnight point of control, pull back, squeeze up, and then bring us into this high volume node here that we left behind from a couple of days ago, from Monday, consolidate here, and then ultimately push the all-time high on the second scenario. Third scenario is a selling scenario. It's the least likely. It will tell us that we're actually in balance, truly in balance. Third scenario is an open that squeezes up, impulses down, consolidates at the low, pushes into the high volume node from yesterday, and then breaks into a lower low again. We would then be in balance, and we're likely to resolve to the downside post news this weekend. That's the third scenario. Okay. My job now is to figure out what side is able to maintain prices, and is successfully squeezing. And I'm going to trade from that side. I'm always going to miss the first move. I'm okay with that. But I'm looking to, I'm watching the order flow, the volume scope, and so on to see how a price and delta is moving the aggressor, and I'm looking to trade from that side. And when I do, I know my key areas are 31.49 and a quarter, 31.51, 31.53 and a half, and then the all-time high above there is 31.57.75. Those are the key areas above. Key areas below is a push down into the 31.40 and a quarter overnight low, which coincides with the swing low on the close. Looking for 31.36 and a quarter, and then from there it's 31.30, and then from there it's 31.23. Okay. Good luck today. I'll catch you tomorrow morning. Take care.